indicating a global slowdown, but executives across industries don't seem to be alarmed. Within the last week and a half, CNBC has asked multiple CEOs whether they're concerned about a recession.
We have not seen signs of, in the U.S. of anything related to a slowdown, but we do know these things go in cycles. But right now, we're firing on all cylinders, and consumers seem to be doing well.
Overall, our markets are performing fairly well, particularly in the U.S. has been very strong, but even overseas we're seeing, I don't see this major recession coming, so I'm not, I guess I'm not pessimistic about 2020.
And the underlying consumer is doing well and making more money, they're employed, and more importantly, they're spending more money.
Our next guest has his finger on the pulse of executives around the globe and can speak more to this. We're joined right now by Carmine DeCibio. He is EY chairman, global chairman and CEO. And Carmine, you probably have a better idea about this than just about anybody we talk to because you talk to so many CEOs. What do you think about whether we're facing a recession here in the United States?
Yeah, so actually I agree with the CEOs you had on camera. We've had a lot of conversation with our clients, CEOs, CFOs, and really the United States economy is doing very well. It still continues to do well, consumer driven. Obviously geopolitical events are slowing some things down, but there's a lot of confidence and there's a lot of capital. Companies are looking to see what they need to do for the future. A lot of this is around technology. A lot of it's around M&A activity. Our capital confidence barometer, which we survey thousands of our clients around the world, 60% still say today that they're going to do an M&A transaction in the next 12 months.
How come we haven't seen more in terms of capital expenditures then? Because that's been surprising. We thought there would be a lot more unleashed by the tax cuts.
Yeah, I think there will continue to be more. I do think, look, what's going on in the world is certainly causing some uncertainty, but for our business, for example, everything we're doing, sometimes when a recession's coming, you start hearing, well, that project's on hold. We're going to put things on hold. We are not hearing that. There's a lot of transformation going on, a lot driven by technology, and that continues.
How far in advance would you start to hear things like that? Is that an indicator 6 months ahead of time, 12 months?
I would say about 6 months.
So you haven't heard any of those issues to date?
No.
When you talk about things that are happening around the globe, potentially slowing things down, you're talking about the trade war?
Trade war, Brexit, there's just a lot of uncertainty around the world, but trade war is probably number one.
Uncertainty around the world, also a slowdown around the globe. We may be feeling pretty good here in the United States. What do you see happening globally, and do you worry that gets imported?
So when we look at, for example, Asia Pac, except for the trade war and Hong Kong, China, and so forth, things are moving. I mean, our business in Asia Pac is growing 14-15%.
Really?
In consulting, absolutely. A lot going on in transactions, a lot going on with technology, a lot going on in terms of companies really getting themselves ready for the future.
Why do you think you hear from CEOs and CFOs that when it comes to capital, they do have plans, but it's for M&A instead of maybe capital expenditure?
Well, I think when it comes to right now, look, there's pressure for everyone to grow, and you either grow inorganically or organically. And if you're going to grow organically, you have to have a real plan, and you have to invest in technology. So, I think most CFOs and CEOs would say that they're looking to invest in technology. Look at right now, most companies going to the cloud. It's a big business for us. We're in partnerships with people like Microsoft and so forth in terms of getting companies to the cloud. We're going to be 80% of our business going forward is going to be in the cloud. We do audits around the world. Our audit tool, Canvas, that's being migrated to the cloud. Now, you might say, does that make it more efficient and so forth? It certainly makes it more efficient, but it also enables us to do innovation around that technology, to put AI into things and so forth. And other companies are exactly the same way.
What will you do with the AI? What kind of data processing do you need? What will you learn from it?
Yeah, for us, what we're doing with AI even today is we're really supplementing what our people do. And what we want to do is really take a lot of the lower level work outside, and have it being done by technology and not by people.
What do you mean lower level, like data entry type of stuff, or?
Data entry, checking things and so forth, reading things. For example, we're using AI right now to look at lease contracts. So when we audit something, we do projects and so forth, a lease contract is this big, and many large companies have hundreds, thousands of them. We're using AI to read through the document, to look at particular parameters, and that will tell you how to account for a lease, a capital lease or an operating lease, by certain parameters in the lease. So we're
and AI is good at that right now? It can read through that document and pick it all out?
Yes. That is one example that we're working on that's working right now.
So Carmine, how much do you really see, you touched on it before, how much do you really see as a percentage of clients that you speak with that are starting to look around China, that are starting to actually question you and say, okay, look, we want other alternatives?
So that's a great question. That is happening. Companies are looking around China today, and they have been looking at it even before all this started. It's practical risk management. You know, they're looking at supply chains. There's no doubt supply chains have been moving out of China. Vietnam is what everyone talks about. But if you really look at it and you're looking at long-term risk for a company, you can't have all your supply chain in China. And you know, it took this maybe to spur companies to look at that, but they're doing it. Absolutely seeing it.
What's the next Vietnam? If Vietnam's the next China and everybody's trying to get there, we hear about how difficult it can be to be there because the first movers have already filled up a lot of the factories. So what's next?
Well, I think a lot of Southeast Asia, there's still room in Southeast Asia, Philippines, there's places like that. There's Eastern Europe. We're doing a lot in Eastern Europe. In Poland, for example, it's got great labor, very smart people that are really good. So there are pockets in the world, maybe Latin America, where more of this can be done.
In terms of the tariffs, very immediately, we are looking at tariffs potentially being put on more goods and higher tariffs starting in 2 days. What will that mean? What have your clients kind of laid out as contingency plans?
Yeah, so, I mean, our clients are, look, they all want this to go away, obviously, but they do have plans. Supply chains is one piece of it. They are looking in terms of, you know, their consumer, what they need to sell to, but the short-term reaction, you know, they're not as concerned about. They are concerned about long-term.
Carmine, this is kind of a weird question, but you say looking down the road, you're going to be 80% in the cloud in terms of your own business at EY.
Yeah.
How much are you in the cloud right now? What is it, 60%?
No, probably 30, 40%.
Okay, so this ramp up that we've seen in cloud is only with a lot of companies still having a relatively small portion of their business in the cloud. You expect that ramp up to continue for quite some time to come?
Absolutely. That's why, you know, the cloud providers, and, you know, there's the big three, but there are others that are kind of coming in. I mean, you know, that's going to just continue. It's really where everyone needs to go. And I know there's concerns, you know, you get the question around security, and security around the cloud. But, you know, technologies that are being built today, cloud technologies, are actually much more secure than old technologies where you had to build a fence around the technology and so forth. When we talk to clients about security and cybersecurity right now, one of the biggest conversations we have is an attack from within, because that's really right now one of the bigger dangers. From an employee, from a vendor, from someone who has, you know, who's inside your parameters today. And so that's something that a lot of companies are worried about, a lot of companies are working on. And this gets into training employees, this gets into, you know, making sure you're looking at your employees, who they are, and so forth.
Carmine, thank you for coming in. It's really great getting such a thorough overview of what's happening with companies around the globe. Will you do us a favor if you do start to see companies saying, hey, we're going to hold off and not invest in some of these things, something you said you can see generally 6 months ahead of a recession? Will you come back and tell us?
Absolutely, Becky. Thank you for having me. It's great.
Great to see you, Carmine. Thank you.
Good seeing you.
Coming up, the Fed under fire all over the place after the symposium at Jackson Hole, and now a yield curve that's signaling a recession. What's next for that body? It could be a September to remember. Former Atlanta Fed President Dennis Lockhart will join us. Check out the futures, strong this morning. Dow up more than 265 points. NASDAQ up almost 100. We'll be right back.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search Combo Offer.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view. With Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
All right, welcome back to Squawk Box. The computers are coming for all of us. At least that's according to Elon Musk. The Tesla CEO sat down with Alibaba Chairman Jack Ma overnight at the World Artificial Intelligence Conference in Shanghai. They stayed clear of some hot-button issues like the trade war, but dug deep into their vision for AI.
The first thing we should assume is that we are very dumb, and we can definitely make things smarter than ourselves. I mean, they didn't used to be humans, right? So our early civilization was very primitive. We didn't have any technology really. We're just like running around, trying to not get eaten or just trying to survive a winter. Now we have like heating and we grow food. This is all new stuff. So, things have obviously gotten way more smarter than the past, way smarter. So that's going to continue. We are not the last step in evolution.
Musk emphasized that computers will surpass us much more quickly than we actually realize at this point.
The Federal Reserve often finds itself in an economic box, but it now finds itself in a political one. Our senior economics reporter, Steve Leisman, is back from Jackson Hole and Western Adventures. He has more on this. By the way, great lineup from Jackson Hole.
Thanks very much. We had some great guests, and they talked a lot about what was going on. So the Fed faces two historic dilemmas: how to respond to President Trump's barrage of criticism of its policies and its personnel, and how to respond to the trade war. There are no playbooks for either, as Jay Powell said out there in Jackson Hole. On responding to the tweets, the Fed has publicly decided not to respond. Here's Vice Chairman Richard Clarida when I asked him out in Jackson Hole if he had a personal reaction to President Trump calling Powell an enemy.
Well, I wasn't looking at tweets this morning. I was in there listening to the conference.
I promise you that was the tweet.
Okay, well, anyway, I'll just talk about what it is that we're doing right now.
So no personal reaction to that? Your jaw didn't drop? You didn't have any? Anyway. You don't think that's inappropriate?
Well, what I'm saying is that I didn't see the tweet, and I'm here focusing on the conference and your interview.
On the trade war, Powell has tried to navigate a middle ground. He suggests the Fed will address the effects of tariffs when it shows up in the data, but has rejected the president's urging to reduce interest rates to weaken the dollar and help U.S. exports. Now, former New York Fed President Bill Dudley, in a Bloomberg op-ed, said the Fed should go further, holding the lines on rates so as not to enable further tariffs. And he drew criticism for partisanship by suggesting the Fed should consider the prospects of President Trump's reelection in setting rate policy. Krishna Guha of Evercore ISI, he worked with Dudley for several years at New York Fed, said setting policy to influence a political outcome is, quote, categorically beyond the pale of legitimate technocratic central banking, regardless of the risk posed by a given political outcome. But Guha and others agree with the Fed's policy of treating tariff policy as it comes, that is, exogenous is the term they use in economics, not as a product of policy, but as an outside factor to put into the whole mix in the formula. It's not easy. It's definitely not easy.
Not getting easier either.
And whatever they think personally, they don't want to say it publicly, and so they just go on and say maximum employment, stable prices. How do you feel? Maximum employment, stable
Was
prices.
Dudley shocking to you? I mean, that
Shocking
had to be
Shocking
extreme.
and I'll tell you why. Because
a lot more complicated.
among other, my first reaction was there were people who criticized the Fed during the Obama years for keeping rates low and enabling deficit
Dudley
spending.
was there then.
Yeah.
Dudley was there then, and there were those who said the Fed shouldn't do that. And the Fed said, no, that's not something we factor in. And I think that makes sense. Look, put the trade thing aside, but having an influence, trying to influence an election.
I'm going to quote it.
Ridiculous.
I'm going to quote it with Dennis
It's
because
crazy to say stuff
beyond
like
the
that.
pale.
because what scares me is that he's gone. But is it possible that there's people left on the Fed that have that same viewpoint and would act accordingly? I'm going to read it. Let's get to Dennis.
I really don't think so, Joe.
I know, but
really don't think
this guy was there. Anyway, thanks, Steve. For more on the Fed under fire, let's welcome Dennis Lockhart, former Atlanta Fed president. He's now a professor at Georgia Tech. Thanks for joining us. Here's the quote, Dennis. There's even an argument that the election falls within the Fed's purview. After all, Trump's re-election arguably presents a threat to the U.S. and global economy. So that is purely, I mean, I don't know. Okay, and its ability to achieve employment. If the goal of the monetary policy is to achieve the best performing long-term economic output, the Fed officials should consider how their decisions affect the political outcome in 2020. I mean, this reads to me almost like a Kubrick or a Orwell or something. This is the most frightening thing I think I've ever read about. Delusions of grandeur and what someone's supposed to be doing. And this guy was a full-on Fed member. And I'm just wondering, is it possible there's still people like that on the Fed that decide that's the role of the Fed in determining, in their view, who should be elected president?
Well, Bill Dudley's a private citizen now. He can say whatever he wishes. You noticed, of course, that the Fed disassociated itself very quickly from those comments. And I think Richard Clarett's reaction to Steve out in Jackson Hole represents kind of the message discipline that you should expect, and I fully expect from the Fed going forward, and that is they're not going to comment. They're not going to be political and get involved in political back and forth, and just stay on the message of their mandated objectives, blah, blah, blah.
I mean, maybe the president has damaged the Fed to some extent, I guess, in terms of its objectivity and independence. But I mean, this is the same kind of thing. I don't think we should have quid pro quo, but I think this totally damages the people's viewpoint of what might be going on behind closed doors in there. I mean, there's no reason to think there's anyone past Bill Dudley. But having just one, how long was he on the Fed? And then before that, was he New York Fed before? What was he before? He was New York Fed.
He was on the desk before that. He ran the open market operations.
New York Fed constant vote too.
You know,
it's well to put it in the context, right? Trump called Powell an enemy.
Right.
I know.
There were a lot of.
He called himself the chosen one too. He was saying, "Who's worse, she or?"
You know what's weird, Joe, is not everybody has your zen with the president.
I'm not talking about his zen. I'm talking about taking him seriously, not literally.
No, I know that. I know
literally.
But I will tell you, there were jaws dropped in the hallways at Jackson Hole. There were people who were visibly shaken when the president. And sometimes, Joe, I think. All right, I'm going to say this. Sometimes I think of the president like my little brother, whose job was to get me so excited and angry that he would get me punished by my parents. And so sometimes I think that's what the president's trying to do.
Obviously.
Instigate
And
a reaction.
And he trolls the media.
Dudley took the bait. Dudley took
Which
the
is
bait.
very dangerous.
He's sitting in Andrew's seat, but you may hear something different from Steve. Didn't you understand it was like, well, who's worse?
Yeah, I mean, we've grown accustomed to the way President Trump speaks. So for me as a trader, I look at that, I see it. I know he didn't mean it literally.
What if I called you a traitor, Traitor, not a traitor, Trader?
How many times has your side called Trump a traitor? With
Well,
Russia
my
and
side,
everything
Joe.
else.
It's not my side,
Okay, not
all
your
right?
side.
It's not my
The other
side.
side. All right. How about Steve? You want to finish?
You have to look at these things in perspective, and the markets have to look at them in perspective. He speaks in such exaggerated terms sometimes. At a certain point, let's let our guests talk. But the media,
that's fine, Steve. But then let's have the grace on both sides.
There's no grace
We're
coming
giving one guy a long leash to say what he wants.
Steve, there's no grace.
Wait, hang on a second.
On the way. No grace is coming. I can tell you that.
That tweet that came out.
I'm sorry.
There's no grace coming.
The tweet that came out last week, where he said he never said everyone out of China. He said everyone should look for alternatives. Media ran with everyone out of China.
Enemy, Steve.
You didn't.
Dennis, you're the chosen one to speak now. Do we still have?
Are you still there, Dennis?
Yeah, I've been listening to your back and forth, and I think it's an expected confusion about what to make of all this and what to think in terms of Fed independence going forward. I do fear that the situation could escalate further, and then we're talking about not just sort of back and forth jabber, but we're really talking about something that could harm an institution that's really important to the country, to the world. So, I'm watching it carefully. I think there is a little bit of a dilemma that the policymakers are facing, and I think Bill Dudley was in a way getting at this dilemma, and that is that to the extent that the Fed policy is an offset for the uncertainty that's risen because of the trade conflict, by adding more accommodation, a cut in September or whatever, you are in effect supporting the more aggressive trade action. So they're caught sort of in a vicious loop there, and I think that's a problem.
The specter of, you could take it to a crazy extreme, Steve. Dudley kept rates low during the Obama administration to get him reelected, and now when Trump's tax cuts to nullify the tax cuts, they raise rates this time around so that he doesn't get reelected. There's crazy stuff you can come up with if you want to.
I agree, and it's tough. And I think Dennis was really getting at the heart of the policy dilemma the Fed is in, which is the issue of enabling the president on tariffs, and the issue of do you preemptively do something?
10 hard. We got to go.
10 hard.
Thank you. There's two Steves.
Two Steves.
Right. And you're leaving. And you're both leaving.
One is a traitor. The
We'll be right back.
Thank you, Dennis. We'll be right back with Talk About Apple.
At Fidelity, we believe your money should... Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about, and hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Live big and spend less on the brands you adore and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way and give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
Market rally. Futures pointing to a triple-digit gain at the open after a Chinese official says Beijing hopes to avoid an escalation in the trade war.
But the tariff clock is still ticking. Major companies like Apple about to get hit as we close in on a weekend deadline. A live report is coming up.
And this hour, breaking data on U.S. economic growth. A critical read on second quarter GDP is just minutes away. The final hour of Squawk Box begins right now.
It just takes some time, little girl in a little out the ride. Everything will be just fine.
Live from the most powerful city in the world, New York. This is Squawk Box.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernan, along with Becky Quick. Also on set today with us is Steve Grasso. He's Director of Institutional Sales. It's past 8.
Yeah, I'm going to stay at 8:20.
8:25.
Yeah, I'm living on the edge. It's Thursday.
We pull
it's Thursday.
You in.
Can't get enough of you guys.
He's at Institutional Sales at Stuart Frankel. Those can wait. And a CNBC fast money trader. The futures right now indicated up. You don't need to sell anything yet, I don't think, Steve. Up 280. S&P indicated up 30. NASDAQ up about 97. Is the 10-year back above 1.495? Not quite. I figured it would if, it's so weird. Things go well and the stock market goes up when rates go up.
Yeah, except for that there has been a little bit of a separation between being concerned every time rates go down just in the last week or so.
You've seen those correlations leave, though. You've seen oil up, you've seen the dollar up, you've seen yields can go up and the market can go up. And that's what we saw a couple of days ago. And you have to remember, at the end of the month, we have that rebalance. So when the market gets hit, a lot of the pension funds have to rebalance their money and put them back into equities. So we've seen that not only happen on the last day of the month or the last trading day, but the lead up into it. And that's a part of what you're seeing now. Obviously, the trade headlines, that was the premier headline of the day.
Right. Let's get you caught up on some of the other stories that investors are going to be talking about today. Second quarter results from Best Buy out this morning. The electronics retailer posting adjusted quarterly profit that came in above expectations, and the company raised its own full-year earnings forecast to something that was at the higher end of Wall Street's expectations. However, revenue and comp store sales fell below estimates for the most recent quarter. Perhaps more importantly, the company, in terms of its outlook, is saying that it depends on a lot of different things. The outlook that it's giving you is based on what it knows right now about the potential for increased tariffs on goods from China. Also, they're not sure how their customers will react to some of these things, and they pointed all of that out. Disney's projections for its Disney Plus streaming service may have been too modest, according to a new survey. 43% of households responding to a UBS questionnaire said that they intend to subscribe to the service. Disney's own projections pointed to about a 20 to 30% gain, or percent of households that they expect to have subscribing by the year 2024. And we are watching the price of Bitcoin today after a big tumble. The cryptocurrency dropped by about 5% in just a 40-minute span on what had been a relatively calm session. Bitcoin falling back below $10,000. You can see right now $9,400. It's not clear what triggered the sell-off.
Barring the last-minute pullback, we're just 2 days away from a new set of tariffs in the U.S.-China trade war. Probably keeping track of this. And this time, some popular Apple products are in the line of fire. Josh Lipton joins us now with more. Hey, Josh.
So, Joe, Apple's Watch and AirPods could face 15% tariffs beginning September 1st. Now, these products are bright spots for the company. Loop Ventures estimates Apple has sold 80 million watches and 50 million AirPods. So Apple could absorb the tariffs entirely. Analysts estimate that could cost the company $500 million. Or Apple could try and pass along price increases to consumers, though that, of course, risks denting demand. Evercore's Amit Daryanani is actually more worried, he tells me, about levies hitting the iPhone, possibly coming December 15th. If Apple is hit with all these potential tariffs, he says the company could take a hit of at least $5 billion to its bottom line. But there is another possibility here, that the U.S. government decides to exempt Apple from these tariffs. In fact, President Trump, remember, recently said that Tim Cook did make a persuasive case when he argued that tariffs on his smartphones put his company at a competitive disadvantage.
Tim was talking to me about tariffs. And, you know, one of the things, and he made a good case, is that Samsung is their #1 competitor, and Samsung is not paying tariffs because they're based in South Korea. And it's tough for Apple to pay tariffs if they're competing with a very good company.
At the end of the day, some analysts don't think Apple will get hit with tariffs on its finished products, neither wearables nor iPhones. That's the bet that Gene Munster of Loop Ventures is making. Munster tells me that the U.S. government, he doesn't think, will ultimately want to penalize popular products from an iconic American company. Guys, back to you.
All right, Josh, thank you very much. For more on Apple and the tariffs, let's turn to Jonathan Geller. He's founder and editor-in-chief of BGR.com. Jonathan, what do you think? What's the potential for Apple here with the tariffs? You think they skate by this, or you think they're going to get hit hard?
Yeah, I think it's a bit overthought. I think long term, I don't see much of an issue. I think Apple's one of the most uniquely positioned companies, in this fight, quote unquote. I don't see it long term as a major, hit to their bottom line.
What do you see playing out? Is there a way that Apple could get exempted, and if so, would that include helping other companies as well, or does Apple actually just get a singular exemption on its own finished products?
I think we don't know, in regards to what this administration will do. I think, Tim Cook having the president's ear and the president seemingly having a good relationship with Tim Cook speaks volumes. I don't believe there's many of those that exist right now as far as the relationships there, with companies of that size. So I'm not sure if it would be singularly Apple that skates by, but I do think Tim Cook has the ability, and I think has shown that he really can influence some of this policy, and he is uniquely positioned in between the China and U.S. trade war as someone who is almost somewhat neutral on both sides as viewed.
I'm glad you bring that up, because he's been walking such a fine line, trying not to offend the Chinese while also trying to stay close to President Trump. Is there a point where you think that could backfire? If things get more heated, is he going to have to choose sides? And if so, what does that look like?
Yeah, that's a great point. I mean, I think Tim Cook in general just always comes across as pretty neutral, right? He's steering this incredibly large ship. And doesn't want to make waves. It's a possibility that he would have to choose sides at some point. His interests are, probably more closely aligned with the U.S., right? But China's a really big part of that equation. So I'm really not sure what the outcome there would be if he had to.
I just wonder, because I know Apple does have some flexibility and would be able to move some of its sourcing out of China. How much of their manufacturing is there now? Where could they move? How quickly could they do that? And if they did do that, would it impact the amount of revenue, the amount of sales that they're doing in China at this point, which is a pretty significant amount of the company's revenue?
Yeah, absolutely. I'd say most of Apple's, manufacturing for probably all of the larger hardware products are in China. Some of the accessories, I believe, are maybe outside of China a little bit. Vietnam could come online. India could come online pretty soon. I think at most reports that I've seen is probably up to 15-20% of manufacturing, maybe a little bit more, could be moved relatively quickly. Amortized across all of their costs there. I'm not sure how much that would really save them, but I do think there's obviously contingency plans in place. I don't see that happening. I just for some reason feel like this is going to get worked out in whatever form or fashion. I just don't see much of an issue with Apple here long term for some reason.
So do you see, Jonathan, a lot of the other companies where Tim Cook was the first one, you had said it before, first one to come to Trump and sort of have that dialogue. Do you see that as a tipping point where you would have to think that the other CEOs from the majors would have to step up and start meeting as well as a benefit to shareholders? Do you see that coming to pass?
Yeah, I mean, I think, independent reports that I've heard and even, direct just people telling me directly, there are those conversations happening. They're just not public. Whether those become public and that's, to your point, something that can kind of move the needle in the future, I'm not sure. But there is obviously that risk there of aligning yourself closely with, some of the policies that, some people are not in favor of. So I'm not sure, what form that takes. But I do think that in this administration, that's the best case. You need to advocate your position or else no one's going to care about your position. And I think that's really important that Tim Cook took that first step way back, after Trump was elected.
Okay. Jonathan, I want to thank you for your time. It's good to see you.
Thank you so much.
All right, coming up, what is it that's working in retail? As earnings season coming to a close, we're going to get some insight from a top analyst on who's falling behind and who's still poised for growth in the constantly shifting field. We have, only 9 minutes of grass left. Stay tuned. You're watching Squawk Box on CNBC.
Walk into the club like, what up? I got a big... I'm just pumped about some...
Requesting time off?
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime. And the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
Dad, I'm bored.
Why don't you help me water the garden?
Don't worry, this summer we've got loads of exciting activities to keep the kids entertained. How about you go explore the Rainham Marshes and play bushwalk bingo on the way?
Yay!
Look online for Asda Tour de Fun to find amazing walks here in London, from art trails to long distance. All powered by Sustrans, a registered UK charity. Go discover your fun side with Asda.
Back to Squawk Box, everybody. A number of retail stocks on the move this morning after reporting quarterly numbers. Dollar General shares are jumping after the company beat on both the bottom and the top lines. Dollar General also reported better than expected comp store sales and raised its full year forecast. And check it out, that retailer up by about 7.8%. Another dollar store chain, Dollar Tree, is also seeing gains this morning. Dollar Tree did report lower than expected earnings, but beat estimates for both revenue and comp store sales, and that stock is up by almost 6%. Going in the other direction, you've got Abercrombie & Fitch. The clothing retailer reported a smaller than expected loss, but revenue and comp store sales were lower than expected. And the company cut its full year forecast because of the potential impact of increased U.S. tariffs on Chinese imports. This next round that's scheduled to go in the next 2 days is supposedly going to impact about 90% of apparel and about 50% of shoes that we've seen here in the United States.
More people looked at Best Buy, the more they didn't like it. I mean, it's down about four points now. What it was
Look, I thought the comments from the CFO, I don't know that it's conservative. I think that they really have no idea what's going to be happening, and they don't have the same sort of flexibility that
But plus,
like a Walmart or a Target.
Look at positioning, though. I think positioning means a lot in this marketplace. It's up 30%. Best Buy was up 30% year to date. So you have a lot of people that were already in the name that now are sitting on the fence. Where do I put the money?
Right.
So you have Dollar Gen and Dollar Tree. Dollar Gen was up 30% as well, and Dollar Tree is up 10%. So they went to these lower tier places already. Best Buy, they were already in, and Abercrombie has just been plagued for such a long time.
You see this with Forever 21, Abercrombie & Fitch. Any of the inside the mall retailers are really struggling too because traffic has been hit so hard, and so you just don't get the same number of people that are coming through. There's all kinds of online options. I don't know about your teenagers, but mine looked at those this time around too. They used to be hardcore, these inside the mall stores, and they're not this year.
Right. So think about why names like Ross Stores or TJ Maxx have been performing well, because they got ahead of the tariffs. All the other companies, all the other retail apparel companies got ahead and they pre-ordered.
Right.
So they're left with a whole lot of inventory. And what happens to that inventory? It goes to Ross Stores and TJ Maxx.
Right.
So they benefit from it. They have the leverage over suppliers. They have the leverage over their inventory. So that's why they've been performing in an environment with nothing but headwinds on a trade front.
Right. And Joe, just back to Best Buy, the idea that an electronics retailer is going to be facing much stiffer headwinds and has much less room to maneuver in terms of where they're getting their sources or prices that they can keep up in other places. I mean, they're just not as flexible as a Walmart or a Target is going to be because they have so many different places they source and so many product lines.
Sales outlook misses estimates. I don't know. It's 43.6, and they said that's the high end, I guess. It used to be they thought the high end was 43.9. The street came down to 43.6. Does that really make the difference?
Let me read the statement again from the CFO. I think it was the CFO said
43.1 to 43.6.
Okay, this updated guidance narrows our top line and raises the bottom line, but it factors in the following. One, our best estimate of the impact of recent announcements regarding tariffs on goods from China. Two, our better than expected first half earnings. And three, this is important, general uncertainty related to overall customer buying behavior in the back half of the year.
The high end is where the street is. I don't know the way that these people that are writing these I mean, the stock is down, so we're just parsing words. But for whatever reason, and they're slightly below on the current quarter too. Let's stick with the retail theme. A rental startup acquired Lord and Taylor. Barney's and now Forever 21 are filing for bankruptcy, and a mixed bag of quarterly results continue to come in. Joining us for what's working in retail, Susan Anderson, Senior Research Analyst and Senior Vice President at B. Riley FBR. You know, we went through this entire earnings season just like the best of times, worst of times. I mean, we'd get one and go, whoa, and then we get another one and go, wow. So it's bifurcated, there's no doubt. What works and what doesn't?
Yeah, so we're definitely seeing some winners and losers out there, but I think there's some buying opportunity because of that. You know, we've seen a lot of these stocks sell off so badly related to the China tariffs or fears around the consumer that even the winners, I think, are trading at pretty cheap valuations relative to historical. The ones that we like are the children's players, which are value-oriented. Carter's, primarily off-mall and wholesale. Children's Place, on the mall, but also moving off mall. But those are benefiting basically from all the disruption in the industry, the department store doors closing, Gymboree bankruptcy, Toys R Us bankruptcy last year. So we see those as winners this back to school and holiday season.
Is it simple? I mean, in addition to that, and to those picks, is it a Dollar Tree, Dollar General, Walmart environment versus a Tiffany and Neiman Marcus? Is that the way you go this time, or a Saks or a Nordstrom?
It's definitely value, but like you mentioned, I think off-mall is also winning, which is helping the mass retailers, Walmart and Target. Consumers, don't want to waste the time going to the mall anymore. Those are more convenient, and also they can pick up some food while they're there. And I think it's becoming more acceptable, at least on the apparel side, to buy apparel at these mass retailers. And Target, obviously rolling out a bunch of private label, is catering to that, and they're offering differentiation.
So you got to think, where's the tariff effect? Where's the mall effect is one. The Amazon versus everybody in brick and mortar trying to transition to digital. It seems like there's a lot of things to try and figure out with retail. It seems kind of daunting right now. I might just stay away, Susan.
Yeah, exactly, which is why we like the kids players. They're more defensive. They're benefiting from the disruption. They easily transition online. Both Carter's and Children's Place sell on Amazon, so we see those as the two most attractive right now in trading at low valuation levels, just given the fact that retail's been very disruptive.
So, Susan, tell me where I'm wrong on this. You have Macy's. I get all the headwinds. I understand why the stock is down 50%. In what world, or how should I put this? Can you buy this stock down 50%, knowing that the brand is worth more than that at face value? I know we've talked about real estate when it's concerning with Macy's, but it's got to be worth more than where it is right now. It's just a perception problem. Is this something that is going to be around 2 years from now?
Yeah, so I don't cover Macy's, but in general, I think the department stores are having some structural challenges right now, which is probably going to take several years to work out. So we would stick with the specialty retailers in the mall, which have their own brands and they control those destinies, and they can easily transition those online or even sell on Amazon if they want to do that.
Got it.
All right. Very good. We're going to end it there. Susan, we appreciate it. Thank you we finally got you. I got you in the chair, and we'll hopefully see you again soon. All right, it's time to, really? Parting is such sweet sorrow.
That's it?
Yeah, time to say goodbye.
I'm going to work on the Wi-Fi issue for you. I'm going to put my feelers out.
What?
See if I can.
You're going to solve his problem for him?
Well, no, but it sounded good in the last parting words.
Yeah, it was good having you here.
Love being here.
We'll leave it at that. I was going to make some kind of joke about, but I'm not going to.
Finish strong.
No. You know what? I have learned. I have learned over the years. With Steve.
What?
Oh, just, I was going to make it
never mind.
One of the Godfather. It was going to be about one of the Godfather brothers. I was going to call you Michael, one of the strong, great Godfather.
Yeah,
I was going to call you one of the good ones instead of.
My nickname used to be Sonny, so it's
Sonny.
different thing. It was definitely never the other one.
Yeah, let's not even. The other one. That's what I was saying. But then you dragged me back in to stick my neck out.
It's such a stretch. It's so hard to do. Steve, thank
pull
you.
them back in. Thanks, guys.
Have
Enjoy the weekend. You too.
When we come back, some breaking economic data. A critical revision to second quarter GDP is due at the bottom of the hour. And later, a window into the trade war through a big American electronics retailer. Best Buy beating on the bottom line earlier this morning, but now new tariffs are looming. We'll bring you all the details when Squawk Box returns.
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit.
With Romans, it doesn't have to be like this.
It doesn't.
At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans.
No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with piles. If you're one of them like I was, you should speak to Xroid. They're the Harley Street specialists in hemorrhoid treatment. It's a new, fast, gentle, safe and effective procedure for hemorrhoids, with no downtime, and the procedure takes just 30 minutes or less. Consultation and treatment starts from $9.95. Xroid, be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
The new Vauxhall Combo Cargo delivers. For the heavy lifters with its payload of up to a ton. For the fuel savers with its highly efficient engines. And it delivers awards, including International Van of the Year 2019. New Combo Cargo. Carries British business. From 168 a month with 6 years 0% APR. Vauxhall. British brand since 1903. Conditional sale. Minimum 18% deposit plus VAT at 20% on total price. Financed by Vauxhall Finance subject to status. 18 plus. Small business users only. T's and C's apply. Search combo offer.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals. On computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply. Excludes Inc. and third-party sellers. Visit website for price promise details. Claim within 7 days.
I'm home. Hi, Mum. Wow, what's that?
Saltwater supercars from Shell. Toy cars that run on salt water.
Science-fueled family fun. Fill up with £30 or more and you'll qualify to buy a car from just $3.99.
Track ready.
Check.
Saltwater ready.
Check.
Go!
Fill up on fun with saltwater supercars at Shell. Participating sites, conditions apply. See shell.co.uk/saltwater supercars for details.
Welcome back to Squawk Box, everyone. The futures have been on fire this morning. Check this out. Right now, the Dow is implied to open up by about 290 points. This comes after a gain of more than 230 points yesterday for the Dow. S&P also looking up by about 31 points. And then the NASDAQ is up by over 100 points in terms of the futures, where we would open this morning. This is all coming after the Chinese ministry. A spokesperson there made some comments that sounded like we could see a little bit of a hold off in some of the retaliatory measures that they'd been threatening. And maybe that gets us closer to the potential for trade talks resuming.
Coming up, breaking data on U.S. economic growth. An update to second quarter GDP is due out in just minutes. We'll be back with the number after a quick break. Stay tuned. You're watching Squawk Box on CNBC.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
strings and things.
First world problem number 346.
Well, you know, people might think I'm exaggerating, but since Virgin Atlantic announced their sale, I can't sleep. 1 minute my head is in New York, the next I'm searching for shows in Vegas. I can't stop. So many choices. South Africa, the Caribbean, California. My search history is a total mess. Oh, I might need to bring it up with my life coach.
Seriously? Get a flight. Bing bong. The Virgin Atlantic sale is now on. Visit virginatlantic.com and fly direct from London.
So, Sean, you did that landscaping job last week, but you haven't been paid yet. Well, that's out of order. 8 hours pushing a lawnmower in perfectly straight lines. 2 days spent giving a tree a haircut. Why hang about? With QuickBooks, you can send invoices on the go and automatically keep track of what's been paid, or not, all in an instant. Doing accounts the old way? It's crazier than that paving.
QuickBooks, backing you. Visit quickbooks.co.uk to get started.
Time is running out for the PPI, which means time is running out for me.
Oh, really?
Give me the script. Come on, do it now.
Well, that's harder than it looks. Remember, the PPI deadline is pressing. If you haven't complained to your provider by the 29th of August 2019, you won't be able to claim money back for PPI. Search FCA PPI or call the Financial Conduct Authority on 0800 101 8800.
Right now, you can get Sky TV and cinema together in HD for a show-stopping £31 a month.
There's something for everyone. Watch laugh out loud comedy, award-winning dramas, and the latest blockbusters like A Star is Born. Plus, enjoy a brand new premiere every day. Get Sky TV and cinema together in HD for an amazing £31 a month. Search Sky TV today. Offer ends September 12th, 18-month minimum terms. Prices may change during this period. Set up £20 new customers, up to 219 existing. Further terms apply.
Welcome back to Squawk Box on CNBC, live from the NASDAQ market site in Times Square. And we're just seconds away from an updated look at second quarter GDP. Also, the latest jobless claims numbers. The futures are strong this morning on the maybe some positive signs on the trade war front. Let's get to Rick Santelli standing by at the CME in Chicago. Rick, the numbers, please.
All right, second walk around the block on GDP. I lost a tenth. As expected, actually, holding 2% originally. First look was 2.1. We have one more glimpse, of course. And the personal consumption numbers, though, maybe the most important component, moved higher substantially, actually. 4.7 versus 4.3. The price index holding steady at 2.4. The core personal consumption expenditure, quarter over quarter, dropped a tenth to 1.7. All right, let's go to claims. I'll jump around. 215,000, which is a rise of 4,000, but the 4,000's from 211, originally released at 209. Okay, let's go back a bit. Let's go to the trade balance, expecting a number around $74.5 billion, $72.3 billion, so a bit lighter than expected. And if we look at retail inventories month over month, that's July, they were up 0.8. So that's more than we expected, and that is going to boost GDP numbers with regard to the rise, of course, of widgets. Now, if we look at wholesale inventories, and this is a preliminary number, it came out as expected, up 0.2. So there's a lot of data points there. All I can say is that in the end, I like seeing these July inventories move up a bit. We all know that we're keeping track of some of the revisions on Q3. First quarter is always supposed to be the weakest. We actually didn't see that. We've seen a little bit of moderation, of course, in second quarter numbers. Looks like third quarter could outpace it. Everybody, of course, is completely paying attention to all the trade issues and all the cottage industries and supply chains involved in that. But maybe we should also look at the macroeconomic data as the world slows, and maybe our inverted curve is more of an international signal now because of all the influence on our long end from an international perspective. But the U.S. economy isn't doing badly. Could it do better? It can always do better, but it's doing okay. Maybe okay plus. Becky, back to you.
Rick, stay with us. We've got more to talk about. Steve Leisman is here, though, too, and he's been digging through those numbers as well. And what's your takeaway, Steve?
Can I just spend a minute saying how great Rick is at that?
Yes.
I've tried to do that. They don't let me do it because I'm terrible at it. He sits there, keeps his cool. All these numbers are flying around. Do they have them? Just does a great job.
And by the way, he's looking off screens way
off over here, and it gives me a little bit of time to talk about it. Let's Rick, I'm going to say something, and you say higher, okay? Because you say it so great, higher. Okay? The consumer spending, Rick.
Higher.
Okay.
Higher.
Let's see what else. Durable goods inside that, Rick.
Yeah, no, these are all very, very healthy.
All right,
yes.
now we don't have the lower here because business investment still down 0.6. Structures down a little bit better than expected. Intellectual property was up 4.7, was up 3.7. Our rapid update was housing investment also a little bit more negative, minus 2.9, and government purchases about the same. Trade took away about 0.75 of a point, with most of that from the export side. That could be linked to the strong dollar, which brings us right around to President Trump and his call for lower interest rates to reduce the dollar. Rick, what do you think about that? Give me your take on whether or not this is the question of our age. Should the Federal Reserve be lowering rates in order to weaken the dollar and help U.S. exporters?
I think that would be a horrible idea. Horrible idea. I think the firm dollar is a testament to our economy, and I think many of the economies that have weakened their currency, either by managing it and fibbing a bit, or just saying, it's just monetary policy offshoots, their economies aren't accelerating. This whole conventional wisdom notion, you lower your currency, your export market rises. Maybe there's a counterfactual there, and their economies wouldn't look as naughty as they look now. But in the end, I think the president, when he referred to the giddiness of the G7 leaders over their low interest rates and weak currencies, just underscores how much drinking must have been going on in France.
I agree. I don't think they're giddy about that. As I said, Rick, if you want Germany's interest rates, you can have Germany's economy, which printed a negative print in the second quarter. And you can also have the UK's economy, which was flat to negative in the second quarter. We have 2% growth. And the question is whether between me and Joe, where Becky sits, the twain can meet, where Joe would argue, I believe, I'm not putting words in your mouth, you think the right run rate of the economy is 3%. And I'd argue that there's a lot of good evidence that it's more like a 2% economy, and we're doing as good as we can or should be doing.
All I know is the third mandate should be that the Fed gets to elect whoever president they want every 4 years, and they should dictate the policy that will get
create the designated they
choice that they want, Rick. Don't you think that they can get together with Comey and Brennan and Clapper, and they can all decide, here's the guy, here's our guy, and in case there's a mistake.
Yeah, and they might all be getting together, playing basketball in orange jumpsuits,
right.
You never know.
Right, in case there's a mistake, you need to have some insurance in case there's a mistake.
Joe, the Fed put out a statement on this.
Joe, I'm going to have to side with you on this, because to me, we throw everything we have. Let's face it, much of the media doesn't like the president, and what suffers? Sometimes how we describe the economy, how we describe trade, becomes more of a half-empty issue. Not meaning we, I'm talking in global media terms, but at the end of the day, after taking all that incoming, we're still 2% plus with all the issues going on. I think we can easily be a 3% economy when we start to get some of these open-ended issues resolved, and they will get resolved.
I'm going to bring you, Steve, to the idea that innovation and not a singularity, but things are happening more quickly, good things in terms of the human experience and the human existence. So our productivity can make up for the boomers and the population, so that 3% is possible.
I'm on your side on this.
You want 3. You like 2.5.
I want 3. I love productivity. I think we need to be realistic about the possibilities and the horizon on productivity gains.
I mean, don't you think Apple, the iPhone, is worth a point of GDP? Just the iPhone. I have the Encyclopedia Britannica in my pocket.
Talk, Joe, about what you're really doing with your phone?
I'm saving time on the road.
You're saving time on the road.
Roads with Google Maps. I'm doing everything.
Can I just read you?
I have a spare Univac computer that took up 4 floors in my pocket.
In your pocket. Yeah. No. Look. But what we don't know is how to really capture. There's 2 issues. One is, are we capturing the gains that they're providing in the economic data?
That's just one small example of where technology is. What about look what it's going to do for monitoring your bodily rate?
Right.
I mean, we're going to do so many
bodily what?
Bodily, not function. Those can never be regulated. Look, I've tried.
I guess at some point I have to say I agree with some of these comments, but there's this guy Robert Gordon from Northwestern.
Oh God, that guy is a Malthusian loser.
He's not a Malthusian loser. No. He just asked the question: is the iPhone and all this other stuff as important as running water, electricity, airplanes, the washing machine, the dishwasher, all of that stuff?
Yes.
We have those things.
They would rather lose the rest
of have those things.
We have the electricity, we have lights,
Right, but will they create the quantum productivity gains that were created by these other things?
Did you see what Amazon did for productivity? Do you see what the internet does globally for productivity and everything? Rick, we can do what? You're great.
When he's not getting the answer from me, he turns to you, Rick. Go ahead.
Steve, he said you're good at looking at figures.
I think productivity suffers from global delusion. It's global delusion. I think many of the metrics that we measure the same way we have historically for a while become much less in line with the U.S. and more in line with global drainage. I think water's seeking its own level. That mentality now is a productivity issue. And I think there are many parts of the globe, like Europe, where productivity is not high on their priority list. And many other developing economies, I think, work against productivity. And I think there's a distortion there.
Just real quick, Joe, you got the half point you're getting from the population growth, right? That's inexorable unless we open up the floodgates there for immigration.
Right.
Which means you need 2.5. And you've been doing 1.5. You needed a full extra percentage.
Well, how do you get there, Rick? With numbers. You're good with numbers. How do you get there? You know, one thing.
And by the way, we've done a couple good quarters recently.
If we were able to do almost 2 with all the headwinds of the last administration in terms of taxes, regulation, as you would have said, the boot on the throat of the private sector. If we can do close to 2 and you lift that off, why don't you get there? You ought to be able to get to 3 in your sleep.
Yeah, no, I'm in your camp on this, Joe. I just think that many of the inefficiencies, not only from an international perspective, but from the government side, are getting less and less. And I do think over time, some of the deregulation, even though it gets vilified in the press for the most part, will show up in better productivity. None of this happens overnight.
I just make one comment.
Wait, no,
all right.
Hold your thought.
All right.
We've got to add another voice to this conversation, somebody who's waiting patiently, Kevin Cummins.
He's a smart guy.
U.S. economist at NatWest Markets.
Morning, guys.
Kevin, whose camp are you in?
Yeah, I mean, I'm very hopeful on the productivity boom that we've seen in the last couple of quarters, but I'm not sure if it could be sustained going forward, given the weakness that we've seen in CapEx. Typically, if you see a pickup in CapEx like you did in the wake of the presidential election, eventually productivity should follow. But the last couple of quarters have been pretty weak from that perspective, so I don't think the dial has changed very much in the last couple of quarters.
I was just going to say, Kevin, if we could have had a year or 2 of the tax cuts without the trade war, we would know if we would get the capital spending response that is going to be required in order to boost the productivity that will change the potential trend rate of the economy and create a possibility. I thought a change of the speed limit to 2.5 was possible within reach. I don't know if it's global economic weakness and the trade war that have us down at 2% rather than what could be 2.5, and I think an ambitious 3.
That's a great point. And I think the big thing here is, so far, the economy has downshifted relative to last year when we did get 3% growth. Growth is closer to, the first quarter was 3.1. This latest revision of GDP puts it at 2 in the second quarter. But I am very concerned about the outlook. I think there's kind of a dark shadow here on the outlook with regard to the lingering uncertainty about trade policy going forward. And I think, eventually there's no doubt about it. The consumer still seems to be in pretty good shape. Today's jobless claims data suggests the labor market is signaling a pretty healthy labor market still.
Hey, Kevin, what if China, what if we remove all tariffs eventually? Suddenly there's this, you hear the music, like, oh, and then things open up. Tariffs are removed. They open up their markets to the United States. Come, we will play fair. We will not steal anymore. Let's say that happens next month. Just dreaming something like that, and everything works. And this crazy, what people think is a crazy trade war, what if it actually changes behavior and makes the world a better place for free trade? Then do we get to 3% now that all this has been lifted?
I think so. If that is the case, where everything is resolved and it's a kind of a best case rosy scenario, I think that's certainly possible.
That's what we're trying to do.
The consumer is still holding in there. It's just, I worry that this divergence between business investment and the consumer finally catches up with the consumer. Not so much this year, but into next year. I'm concerned about the underlying fundamentals of the economy. Don't forget, you're heading into an election year. There could be business decision makers in kind of a wait-and-see approach to the outlook, in addition to uncertainty about trade policy. I think that alone probably holds back business investment next year. Business investment typically leads consumer spending. So, yes, the consumer is in better shape than we thought. Employment growth is still solid enough. You have had some moderation in employment growth. You know, the BLS just came out recently with their benchmark preliminary estimate to payroll growth, and they marked down payroll growth pretty noticeably, or they're expected to mark it down. We won't get those data till early 2020, but it does suggest there's been a downshift in hiring as well. Claims are good, and they're still at a very low level that I wouldn't get too excited. But I think the economy is downshifting here, and I think we're probably not going to see that dramatic of a slowing until next year, when you're probably growing below trend. And trend growth is somewhere probably around 1.8 or so.
Okay. This is a super cool story. We got to keep talking about it. The potential of the economy. I think that's really the most really critical for the investor outlook, and I just think we ought to keep the conversation going. Not today, not now. We got to move on.
We will. All right, Steve,
Nice
thank
job,
you.
Kevin.
Rick, thank you. And Kevin, good to see you.
Sure, thanks for having
me.
Many of the nation's auto workers only have 2 weeks before their current contract expires. But right before negotiations start to pick up, we've got a few monkey wrenches, including an FBI raid on the home of the president of the UAW. Phil LeBeau joins us now with more. Hey, Phil.
Hey, Joe, this is the latest development in an ongoing investigation that really stretches back over the last 3 or 4 years, involves a number of former UAW executives accused and some of them convicted of corruption, of kickbacks from vendors for UAW training facilities. This is video from our Detroit affiliate of FBI agents raiding the home of UAW President Gary Jones. Again, this is part of this expanding investigation into UAW leadership and whether or not there were vendors who were paying them ultimately kickbacks, and that's at the heart of this investigation. UAW releasing a statement saying it will continue to cooperate with the government in its investigation, as we have been doing throughout. Why does this matter for investors if it's simply the UAW and is not involving actual auto executives? Well, there's a contract that comes up in a couple of weeks. Here are the 3 key issues at the heart of these contracts. Time needed by new hires to reach full pay, hiring temporary workers, how many the automakers do hire and how much the union wants that to be reduced, and then the question of healthcare costs, how much should UAW members pay? As you take a look at GM, Ford, and Fiat Chrysler, and we're showing you these stocks over the last 4 years, the question for the automakers is, and for you as an investor is, how much do these contracts, if they have a strike that comes up on September 15th, how much will this impact the automakers and ultimately their stocks? These stocks haven't done anything, guys, over the last 4 years. These contracts cover just under 160,000 workers, and again, they expire on September 15th. And the UAW leading up to this has been saber-rattling, saying, we want a bigger chunk of the pie. We want more, as the automakers are much healthier now than they were 4 years ago or 8 years ago. But this corruption investigation has to have you asking, if you're a rank-and-file member, are you going to be as enthusiastic about potentially a work stoppage or being tough on the automakers as you were maybe 10, 15 years ago?
Yeah, Phil. Thank you. Shocked. Gambling's going on. So there's some corruption in the union, Phil. Anyway, in union management. Thank you. Appreciate it. Coming up inside the second quarter for Best Buy, that's a company with significant trade war exposure. Shares falling this morning after the retailer reported mixed 2Q results. We'll have much more after the break. Stay tuned. You're watching Squawk Box on CNBC.
Have you heard about investing in gold ETFs or gold bullion? Let's look at a gold ETF and gold bullion side by side. Did you know that most gold ETFs carry hidden risk from not just the companies who own the gold, but also the companies who manage and service the ETFs? So why not invest in physical gold owned by you and no one else? Don't settle for gold that isn't yours. Invest in real, physical gold bullion from Monex, a trusted name in precious metals investing for over 50 years. Owning physical gold provides you with the diversification that precious metals bring to an investment portfolio. And it also allows you to choose whether you want your physical gold delivered straight to you or stored for you in an independent third-party vault. Call Monex now to speak with an account representative about owning physical gold products. Be sure to ask about a free report with insight on why you should invest in physical gold bullion. Invest in real gold you truly own. Call Monex and get your free report now.
Do you have concerns about mild memory loss related to aging?
Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
We use Angie's List because we can always find great local pros.
For any type of home project.
I use Angie's List because it's free.
Free to read reviews.
Check their ratings.
They can even match my project to qualified pros.
Go to angieslist.com today.
Why did you invest in gold? Are you living in the past? In a digital world, gold shouldn't weigh down your portfolio. You see where things are going. Digital currencies like Bitcoin are the future. They're secure, borderless, and unlike gold, they actually have utility. Leave the pack behind. It's time to drop gold. Go digital. Go Grayscale.
Welcome back, everybody. Best Buy shares are lower after mixed quarterly results. Courtney Reagan joins us with more on this, and you've been listening in?
Yeah, I've been listening in to the call. It's ongoing. This is the first quarter for Best Buy under new CEO Corey Barry. So the consumer electronic retailer beating on profit with its continued expense management, something it's been very good at. But its revenues fell short of estimates. Comparable sales coming in up 1.6%. That does mark the 10th straight quarter of positive growth, but it was less than the 2.1% growth analysts had forecast. International comps negative. That was the big drag. Canada, especially there. Best Buy also raising its full-year earnings guidance range, but lowering the high end of the revenue forecast. The guidance includes the estimate of tariffs list 1 through 3 going to 30% and list 4 at 15%. And, quote, general uncertainty related to overall customer buying behavior in the back half of the year. U.S. online sales grew more than 17% to $1.42 billion, which the company says is its biggest non-holiday quarter. Remember, Prime Day fell in this quarter. It also makes the stable margins fairly impressive to some analysts during the period. Appliances, tablets, headphones, services, those are the strongest categories. Gaming and home theater the weakest, and gaming is expected to continue to weaken. And on her first earnings call as CEO, Barry said, quote, a bit of art and science to estimating this with regards to the impact of tariffs and pricing changes. Quote, there's a lot of moving parts there. We think many vendors will be moving business out of China. And she said due to mitigation strategies, quote, the piece that is impacted is actually substantially smaller than the overall number of items impacted. So they really wouldn't narrow in on what they're going to do with pricing and what categories, on what items, at what time, because there's still a lot of things that are changing.
I get it. I mean, if you don't have any sort of visibility yourself, how can you tell the street what you're seeing? How aggressive were the questions coming from analysts on this?
You know, a lot of questions from tariffs in the beginning, and the call is still ongoing, so they were just discussing it as we popped off here really quickly. So I think there's just still a lot that everyone's trying to figure out, and I think the street is being relatively forgiving for these companies because, like you said, like what can we do here?
If they were being really clear, saying here's what we think is exactly happening, I don't know that I believe them.
Yeah, exactly. And you know, and they're dealing with vendors, right? So they're in some cases one step removed from the tariffs. So they've got to see what the vendors are going to do and make those changes.
Thanks.
Yeah, we got to see if the tariffs are still on tomorrow.
That's true. And at what rate?
Later today. In fact, let me check right now. It's 8:52, 8:53. They could be anyway. Thank you, Courtney. Take a look at the futures right now. They're strong, up about 270 points on the Dow, 28 on the S&P. NASDAQ indicated up about 92 points. Treasury yields at this point are the 10-year is about 149 or so, 148 this morning. Still, the 2-year, there's an inversion there, 1.51. Joining us now to talk more about stocks and the impact that yields are having on the market, JJ Kinahan, Chief Market Strategist at Ameritrade, and here with us on set, Mona Mahajan, a U.S. investment strategist at Allianz Global. Investors are who's wagging who, which tail is wagging which dog. I would think the size of the bond market and how important it is that we should definitely not just say, oh, that doesn't matter. Let's just focus on stocks. Something's going on.
Yeah, clearly our yields falling from about 3.25% just last year to about 1.5%. It's sending a message. The long bond tends to be driven by two things. One is the outlook for the economy. Two is what's happening with rates globally. So on that second part, we know what's happening with rates globally. We have over $16 trillion of negative yielding debt out there that is anchoring our long bond down somewhat. But on the first part, which is the economic outlook, that's really where the question marks start to come up. We just saw this morning, a pretty decent GDP report. What stood out, of course, continued strength of the consumer, business investment pretty strong, but we have this ongoing uncertainty We've been talking about it for a while, but it's trade really that comes down to where the uncertainty lies for businesses and potentially the consumer going forward.
And it's not either or. It's either global rates or it could be 50-50. It could be 70-30. Yeah. So even if you go down to 90-10, that it's 90% global interest rates, there's still a 10% sort of overhang on just growth fears globally, right?
Yeah, I mean, it really is what's happening globally and whether or not that will come to the U.S. shores.
That's global too, yeah.
The U.S. has done a pretty good job of decoupling thus far, and I think part of the reason you're seeing our equity market hold up so well is that it is become a flight to safety asset class. You know, there's that term out there, TINA, there is no alternative.
Yeah.
So when yields are so low globally, when you know elsewhere looks a little bit softer, really you have U.S. equities, maybe the U.S. IG market, gold, and even the U.S. dollar that are holding up pretty nicely.
Joe, earlier I said ignore the bond market at your own peril. We were saying, wow, stocks have held up pretty well. We're right on, or just not that far from an all-time high in the middle of a trade war. Wow, that proves that things aren't being impacted. But then if you look at the bond market, the stocks could come and validate what the bond market is saying very quickly. We've seen that happen before. Is that possible?
Oh, it is, Joe, but I think until we have some resolution on tariffs, I don't foresee that happening, actually, only because it's kind of we're stuck in this range, in my opinion, between about 3,000 on the S&P 500 and 2,750, because when we get to the higher levels, we've seen it happen before, people are like, wow, over 3,000 seems expensive. You get down to 2,750, and it's almost the fear of missing out. And the fact, oh my God, if tariffs get settled tomorrow, I don't want to sell everything. I look at even our clients' behavior right now, Joe. They've actually the last 2 months been net sellers of equities.
So you get negative if we settled the issue, because then people would say, well, I'm not going to buy on the dips?
I think that you get the initial pop, Joe, and from there it may be, hold on, what have we really gained here? Companies still have to do well. Becky just said in the last segment that companies are getting a little bit of a break perhaps right now because of what's going on, and I actually agree, because it's just too hard to predict. And what actually scares me the most about what's going on right now, Joe, is nobody's talking about investing in infrastructure, because if you're a CEO, it's really difficult to make that commitment in such an unknown situation.
They do get to... You might get a little bit of a pass on missing your numbers too. If your forecast includes tariffs, or if your comp store sales includes tariffs, you can say, well, if it wasn't for the tariffs. So I haven't looked at it that way.
Well, I think it's a little bit of what's going on, because it's hard to hold people in these unknown situations. And again, you look, I think we're going to feel some of the ramifications of this a lot more 3 years down the line, when they haven't invested in the ways they should have right now.
Mona, do you ever disagree with Mohammed?
We like Mohammed's thoughts. He's pretty well thought out. But, what he talks about more than anything is globally you need some not only monetary reform, fiscal reform, you need that structural reform.
I mean, are you able to look around corners the way he says he can do that?
Yeah, he
You're able to do everyone at Allianz?
Everyone at Allianz.
He teaches people to look around corners in a multi-speed universe with the new normal. Anyway, thank you.
Thank you so much.
Yeah, tell him we said hi. The Mets lost again. JJ, thank you. We'll see.
When we come back, we will get you caught up on all this morning's market action and get you prepped for the opening bell. Stay tuned. You're watching Squawk Box on CNBC.
At Synchrony, we're changing what's...
Moving from one rental home to another is so expensive.
Last time, we had to pay hundreds to move in, the first month's rent,
and then a big deposit. With Romans, it doesn't have to be like this. It doesn't. At Romans, you really can move in from just £36, plus your first month's rent.
And that's it.
Nothing more to add. Move in from just £36, plus your first month's rent. With Romans. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
There are certain things in life we simply don't talk about. And hemorrhoids are, right up there, so to speak. But we should, because there's 8 million people in the UK right now suffering with